insurance companies claim they can save you money, but Consumer Reports is pushing back. This morning in a new article, The Truth About Car Insurance. The magazine, quote, embarked on a comprehensive project spanning 2 years in which we analyzed more than 2 billion car insurance price quotes for more than 700 companies. That's a lot. First on CBS This Morning, Margot Gilman of Consumer Reports is here with the findings. Good morning to you, Margot.
Good morning. Thanks for having me.
I'm thinking after people listen to what you have to say, they're going to feel differently about their insurance companies, but let's get started.
Okay.
Because most people think it all depends on my driving record. Right. If I have a good driving record, I'll get good rates.
Right. I think that our study has a lot of surprises in there. The main one is that there is a complete lack of transparency in how car insurance is priced. You know, imagine going to the store to buy a loaf of bread and having no idea that $3 is a good deal and $10 is outrageous. Well, that's exactly how it is with car insurance. I would bet if you would ask most people if they think, most people wouldn't know if their insurance price is fair or outrageous. Right. And that's because the insurers have a very complex way of pricing you. And more it has to do with factors like your credit score and how you shop, and less to do with how you drive, whether you're a safe and careful driver.
So let's go into that. How is it that your credit score is more important than your driving record in determining how much you pay?
Insurers say that credit scores predict not how many accidents you might have, because a credit score can't do that, but what is the likelihood that you're going to make a claim. And it's important to understand that the credit score that they use is not the FICO score that most consumers are familiar with and know the number of. It's a secret sauce special score that they cook up on their own. What they do is they go into your credit report and they cherry pick 30 out of about 130 elements and weight them differently to predict to them whether you are a good, poor, or excellent credit risk.
So talk about your credit score and drunk driving conviction.
Right.
I thought that was really...
Right. So one of the things we found to show how cockamamie the use of credit scoring is, if you have a poor credit score but pristine driving record, you can be charged hundreds and hundreds of dollars more than a person who has an excellent credit score but a drunk driving conviction.
Makes no sense.
So they're trying to determine whether you're litigious or not in the end.
Well, yeah, whether you're going to use your insurance for the purpose for which you bought it.
Did they respond to this at all?
We did not get comments when we talked about credit scoring. I mean, some insurance companies do. They make arguments that credit scoring is a fair predictor of risk.
Well, State Farm Insurance sent us this following statement. They said this: our additional use of a credit-based insurance score helps us measure auto insurance risk more precisely. So they acknowledge that they do it. What about data you collected from every zip code?
Right. Well, I mean, we have, this study was massive. So we looked at every insurance company, the 5 biggest insurance companies in each state, by zip code. So we have 2.2 billion price quotes that we looked at, and we worked with statisticians, and we have very high confidence that the findings that we have are significant statistically.
And loyalty, you found, doesn't matter?
Well, insurance is a pricey proposition, and so insurers very frequently try to sell you on the idea that you can get a discount. Loyalty discounts, discounts for putting in anti-theft devices, but we actually figured out a way to crunch the numbers and see what those discounts are, and they are often really negligible. You'll save more money by switching insurers.
Let me just understand this. Are credit ratings important because they determine whether you're likely to sue them, or is it something else?
They're important to the insurers say, because they are predictive of whether you're going to file a claim, not whether you're going to have an accident. So, I mean, I think, you can assume that somebody who perhaps is more well-to-do might pay for an accident out of pocket rather than going to the insurance company with the claim.
Margot, thank you. You also offered great advice about how people can find better prices on car insurance. Thank you so much.